Okay, I'm Suhail Aslam. I'm Project Director at Teesside University, and I'm going to talk about R&D tax credits from a technical assessment perspective. So one of the three fundamental questions for R&D tax credits, those questions are whether the work you are undertaking has an advancement in science and technology, what the science and technology that you are looking to overcome, what the advancement is in that science or technology, and what is the uncertainty that must exist, i.e. you can't just go out and get a consultant to undertake the research and deliver that for you. What you can claim for: creating new products, processes or services, changing or modifying an existing product or process or service are absolutely within scope. What you can't claim for is routine product development, and a commercially innovative product is not enough. It must have some scientific or technological advancement, and science doesn't include work in the arts, humanities and social sciences, including economics. Needing to prove the outcome. There are certain questions that you need to overcome, and those are the ones I've addressed earlier. However, we need to look at when and how those uncertainties were actually overcome, understanding the reasons and describing the reasons for failure as well as success, and also the impact of that, and defining the time and resources and associated costs that were involved in the project. Those are the four elements of proving the outcome, and that forms a large element of the technical assessment that I would undertake. Sectors and industries that are pretty prolific in accessing R&D tax credits: computing and software development, large elements of things like algorithm design, artificial intelligence, big data and visualization, engineering design, construction, biotech, and the other elements of the sectors described below are all key industries that do access this program and this tax scheme quite readily. Some examples of eligible activities: behavioural assessment of new materials in product design, waste reduction through process and machine innovation, integrating processes into a fully automated line, removing or reducing toxic or hazardous materials from manufacturing processes, developing new processes to meet health and safety, and reduction of power, fuel and energy consumption are examples of projects that I've undertaken with businesses successfully. A couple of testimonies. The Weatherby Group are a manufacturer of building materials, and they've been doing this for many, many years, in fact decades. And it wasn't until we went in a few years ago and spoke to the managing director, Alex Chalmers, and explained the R&D scheme that he really bought into us working with them to understand how they could claim back the effort and time and resources that they put into their R&D year on year. By working with them and helping them to structure their business and their layout within their organisation, they've now successfully reclaimed R&D for many, many years with our help and support. And Alex, I think, is a great advocate for the R&D programme and really understands how their business can benefit from years to come. Another testimonial was WRL Glass Media. This was a business that I was working with, and as I was walking around and speaking to the managing director, I kept looking at and listening to things that they were doing. When I finished working with the business, I mentioned to Gareth that I felt there was quite a lot of opportunity within that business to access an R&D scheme, and he didn't feel that they did anything that was unusual or innovative. However, a lot of businesses fall into this category of believing that they actually don't do anything innovative or radical. However, sometimes it takes an independent person to assess their business, understand what is their day job, but what is R&D. Having undertaken the investigation and submitting the claim to the HMRC, we were successful in getting £59,000 back for that business. And Gareth is another great advocate of the R&D tax programme and really understands now how to structure and lay out their business so that they can go back year after year with successful claims. The third testimonial was an electronics company which didn't want to be named. They produce lighting control modules, and the R&D claim consisted of a number of software and quality checking fixtures that they had designed to address a bottleneck issue. And that bottleneck was really causing major delays and inefficiencies in their process. The development of this software and checking procedure to quality assure the product meant that the bottleneck productivity has been removed, and the increase in productivity is now at 600%. The quality checks are recording better accuracy and pass rates compared to the old legacy system, and they also incorporated a serial batch and traceability printing technology so that each module upon completion is printed and completed to go through to packaging. I also have a role at the Make UK National Manufacturing Award, where I'm the chair of the Innovation and the SME of the Year. And recently, I was tasked with assessing this product, which was a roast in the bag chicken roast in the bag product. And I applied the same principles of the R&D scheme when I look at innovation. And I think this company really worked and addressed many of the issues that and challenges from an R&D perspective that aligns very close to the R&D scheme that is laid down by HMRC. Clearly, there was a commercial imperative here, and they worked with partners to deliver this. But the fundamental point of this was that the HMRC principles are very good principles if anyone is looking at innovation or R&D as a strategy. So in terms of our approach, the initial visit to a business would be by myself and Clive Owen. If eligible, we would then undertake a technical assessment and then a financial assessment. We would prepare the document and the application, and then follow up and support if there are any questions or queries that come back from HMRC. So I work with Teesside University. We believe we have a breadth of technical expertise, independent and impartial assessment of your project. We provide a written testimony to substantiate your claim, and we're able to quickly and efficiently differentiate any eligible contribution from any ineligible contribution. And that is a major factor in understanding the breadth and depth of the claim that you can put in. Teesside University has a large campus, and we're continually investing, which means that we've got many new departments and laboratories with the latest equipment. So if you are a business that's looking to do R&D and needs a partner or an organisation to work alongside you, we have many different sectors and industries that we support through our infrastructure and our departments, and these are just a small range of the things that we currently have where businesses can come and access. So make R&D part of your core strategy. Just don't go through making a single claim. Understand this as a core function and reinvest that money to grow your R&D activity for your future claims. And the benefits of that mean that you have new process, product and service innovation, and your customers and competitors and suppliers see you as an innovative company. If we can be of help, please do contact us on the email below. Thank you.
Thanks, Suhail. I'm Nicola Bellerby, tax partner at the Durham office of Clive Owen LLP, and I've been working with R&D claims since the year 2000. The SME scheme is the most usually claimed one, and you can qualify for this if you're a limited company. That's absolutely essential. You have to be in trading for at least a year, employ less than 500 people, and have turnover which is less than 85 million a year. So that covers a lot of our clients. Considering your R&D claim, just remember 72% of claims made are below £50,000, which demonstrates it's there to help companies of all sizes. There were around 60,000 claims last year, and 52,000 of those were SME claims. Tax relief of £5 billion was given, but only 100 million in the North East, so we're really hoping that we can help boost those figures. The highest number of claims wasn't in the science sector, it was the manufacturing sector, so we have a lot of those sort of businesses around here, and they are benefiting from this R&D claim. What I would say is don't be put off. People are put off quite easily because they might be making a loss. They think that nobody gives them anything for nothing, but it's amazing how a lot of clients and a lot of businesses are benefiting from this who at first didn't think they were going to. So what is an R&D claim? Suhail's looked at that, but we're going to have a look at what the qualifying costs are, who might qualify, when you can claim or apply for advance assurance, and some recent changes in the legislation. So the SME scheme, like I said, this is the most popular, most claimed scheme. What happens is there's an uplift of 130% of the costs that you incur in R&D. The specific items that are included in those costs, and we'll have a look at those in a moment. So for a profitable company, if that company spends £10,000 on R&D, it's treated as if it's actually spent £23,000. So what happens there is that each pound that's spent on R&D saves tax at 43.7%, so much higher than the 19% corporation tax usual saving. And a loss-making company, similarly, it's treated as if it's spent 23,000, so it's 10,000. But even if it's never made a penny in profit, it can actually surrender that R&D claim and claim back £3,335 from HMRC in corporation tax. Remember, it's never even paid any corporation tax, so that's why it's hard to believe at times. Or we might carry those losses forward because we might think we'll make some profits in the future, or even carry them back to when we paid tax at a higher rate than our 14.5%. But these tax refunds really help get businesses started, so well worth looking at. The RDEC, the R&D expenditure credit, is the other type of claim, obviously much less claimed. That's simpler to work out in a way. It's just 12% of the costs up to 1st of April 2020 and 13% after that. So still worth claiming, but the monies received are actually taxable, so you don't get your full 13%. So I said we'd look at qualifying costs. These are staff costs, salary, employers and pension contributions, but we need to watch out for furlough payments from the government because those have to be deducted. Software and consumables. The consumables must be used up in the R&D process. That came in 2015. Water, fuel and power, contracted staff, externally provided workers and subcontracting. And that's okay for SME, not so much for the RDEC. And clinical trial volunteers, which is one we don't actually see very often. Recent changes, just be aware of, a loss-making company is going to be restricted. R&D tax credits will be capped at £20,000 plus 3 times the annual pay as you earn and NI liability from April 2021. That the £20,000 has been added, which has made it a lot easier for our single director type companies. So it's better than it was going to be. It was supposed to prevent abuse of refunds because people were setting up companies and claiming tax back when they shouldn't have been. So what is an SME? It has to have under 500 staff. It has to have a balance sheet total of less than 86 million euros or turnover of less than 100 million euros. And it hasn't to have a substantial amount of it owned by another company. So a big company, a large company can't set up lots of little companies and get this SME tax credit. That's what that's about. So the RDEC scheme, as I say, it applies to those large companies, and that's ones that are not SMEs. And it also applies to SMEs if they've had state aid grant funding, so notifiable state aid in this context. And it applies to the whole of the R&D projects. Sometimes it's not so good to claim a grant in these situations, so another thing to watch out for. And it also applies to an SME if R&D projects have been subcontracted to it by a large company. But it's still worth looking at, it's still worth claiming. Time limits, quite important, and this is getting very close now. Claims must be made within 2 years of the year end. So, for example, a claim for the year ended 30th of June 2019 must be made by the 30th of June 2021. So at the time of recording, we have a couple of days to get this done. Advance assurance is quite an interesting one, and when I've done webinars in the past, there's a couple of people have said this has worked for them. So it came in November 2015, hasn't been very much used. and it's only for companies that haven't made a claim before and have under 2 million turnover and less than 50 employees. And really it means that you ring the revenue, you tell them what you're doing, they say yes or no, and then every time you submit your CT 600, which is where your claim is made, they won't ask you any more questions, but you have to tell them every time you send something in. So whether they have a little check at the time, I think they must do. And that was a very quick run through, but if you have any questions, like Suhail said, we work very closely together, him on the technical side, and then we do the numbers. There's my contact details, so please don't hesitate to get in contact. Thank you very much.